Alright guys, so I thought I'd do a bit of an update on the trade that I was looking at yesterday. Posted the video out on YouTube, but what I realised is I kept my camera and my face in this 60-minute chart, and obviously you couldn't see, you could obviously see because I've got the drawing tools synced. You was able to see it, kind of what I was looking at with the double top, but I was actually, you know, on the hourly, which is the time frame that I would be looking to actually take the double top. You couldn't actually see it because I was covering it with the camera. So apologies for that, but it's a popular video anyway. Hopefully you got value from it, and we had lots of great comments on that. And I wanted to just update it because now we're in this green zone. I wanted to talk about, kind of following on from yesterday, we're now putting in that V shape. We've got a bit of nice price symmetry and time symmetry here in terms of the V shape here, and this would be, it's in the lower portion of the kill zone, but it is in the kill zone. So as long as we've tested that, remember what I said on the last video about being prepared to be stopped out and then potentially taking another entry, because the reward to risk profile is so much in our favor that we can afford to be wrong a few times and still break even with one winning trade. So yesterday, this is kind of a zoomed in look at how we drew that on based on our prediction. Now yesterday we was nowhere near here, so this is kind of played out almost to the T. It just hasn't pushed up as far, but you can see that this is the double top here. So again, don't like all the hindsight traders and all that, so you can go and watch the video if you haven't seen that one. I went through this entire analysis, what we're looking at, the zone we're looking at, how we're looking to get involved, why we're looking to get involved that way, how we can use the double top as structure to get our stops above, because this is a big ATR pair, and we went through all of that in the video yesterday. So if you haven't watched that, go and check that out first. But this is really a follow-up and potentially how we're actually going to get involved this morning. So very, very important with double tops that you wait for the close of the retest. You can already see that we've got divergence. So we've got the we just went overbought. I have my RSI settings to the extreme, so 80 and 20. So conventionally it's 30 and 70. And we went overbought on the initial test. We've got divergence on the second test. In other words, we've got equal tests of the highs on price, but divergence on the RSI, and we've dipped way below 70 again. We're about 60 at the moment on the relative strength index. And it's important that we wait for the close of the second test, because if this closes above the previous high, then that is there's a higher probability that the market's likely to continue up. But if we close below the previous low, then there's a high probability that we're either going to consolidate, but more importantly roll over. See a little rollover here as the sell orders kick in. And what the criteria for that is we must test the high. So the high being the, let's just bring on the, just so you can see exactly what the high is. This is the high, okay, right down to here. Okay, so this was the initial high, and the high is the wick from the close to the high, basically. So you guys are familiar with open, high, low, close bars. Candlesticks are exactly the same. You've got the open, and then you've got the close, and then you've got the high and the low. And the high, which we're looking for a test of, is determined by the zone between the close and the high. Okay, so that's this zone here. We've now tested that zone. Now what we can do is look what the ATR is at the moment. So at the moment we've got a 26 pip ATR. So if we just go down and look at 141.96 of where this high is here, where this high is here, 142.03, we know that we want to be at 142.29 with the stop loss. Okay, so 142.29 in this zone here, and then really it's just a waiting game to see where this candle closes, and we'll be entering what we call next bar market, which basically means we wait for the market to close and open, right? You know, the session. So this is an hourly session. Every single one of these candles is an hour. We wait for one to close and the next bar to open, and on that next bar open, that confirms whether this is valid or not, because we know whether it's closed above the high or within the high. It doesn't matter if it closes below either now, except it just skews the reward to risk slightly. So the higher we can close, the better. ideally in this pink red zone here. And if we close in this zone, we've got about 8 minutes left of this candle. We can actually execute this trade, and I'll execute it on this platform to demonstrate that for you as well, just to show you how we get involved, how we place the stop orders, and how we manage the trade. But we won't be placing limit orders here. It's really, really important. We can't place limit orders, because if we place a sell limit order here and the market ends up pushing up and closing above, then we're in a trade that we don't want to be in. So it will be an invalid, low probability trade, which I don't want, which is sometimes why I say patience pays the bills, because sometimes you have to wait and, you know, have your finger on the trigger ready to fire away. And I'm really hoping that we can kind of close in this zone, and that will be an absolute textbook follow on from the video that I put out yesterday. So I'm going to wait and see what happens in the next 7 minutes. I'll update you on this. If you want to pause this video, go and watch the video before this. I recommend you do, and I'll see you in a minute. Alright guys, so just to update you on this, we can now place an order on this. This is going to be a sell market order, okay, and we're just going to execute this for the sake of this demonstration, and we're just going to do exactly what we said earlier. So we're going to place our stop loss, an ATR above the high. You're going to want to take into account any front running that you might do on that, so obviously allow for the spread if you're front running orders. 142.28, we're going to go 142.28, and then our target is going to be just front run above our 141.3 flat level, so we're going to go at 141.32, so take profit 141.32, and that's it. The order's in. We've got limit orders in. We've got a buy stop order up here, we've got a buy limit order down here, and that's it. We'll just see how this plays out, and I'll update you as and when. Alright guys, so it's a little bit later on in the day. I wanted to let things play out just so I had something to update you on. And following the close, following the signal candle for our valid entry, we actually then pushed up the next candle, and we closed above the high, which, as I said before at the start of the video, that and in yesterday's video, that you have to be prepared for this to be invalidated and then potentially look to enter again. But you also need your stop loss at a position where you've given the market enough breathing room so that you've got optimal entries. I spoke in my video yesterday about putting in the same amount of effort and attention to any order, not just your entry order, but your target orders, your stop loss orders, so that you have this optimal system that allows you to have breathing room on your stops, so you don't get stopped out too early and then the price rolls over in your favor, but also the target taking positions at a place where you're not being too greedy. And as long as the reward to risks in your profile, in your favor, you know, that's really what you're aiming for. And then the key over time is just to minimize your stop loss and maximize your profits, and that's it. That's the entire game. So what happened here earlier was this became invalidated. We closed above the high, which meant there's a higher probability that we're going to see continuation to the upside. Bearing in mind that we're not at that major level of resistance, looking left, 144.70. So, you know, that if we break and close above the high, there's a likeliness that we're likely to push up even more. And we did. The next candle then opened up, pushed all the way up to 142.25s, almost got stopped out there, but we stayed with the trade because the trade is the trade. And now we held that level, we moved sideways, we found some resistance because the stops got nice breathing room, and then we started to see the decline. So we saw the big bearish roll off, we saw the orders kicking in, as I said earlier, the protection of this level, we saw bearish candle, bearish candle, bearish candle, bearish candle, and we're still seeing some bearish movement on this market right now. So hopefully, I'm not going to move the target or anything. I'm happy with where I've analyzed the optimal targets, 141.32. We're about 60% of the way to targets right now. So hopefully, if we hit targets on this, the entire move will be roughly 53 pips, which will be all right. And I'll update you as and when, but now it's just a waiting game. Now, some people do do a graceful exit. So if it becomes invalidated, they can close out the trade at break even if you push down to break even, or just in profit so that you allow for the spread and you don't lose money on the spread. But we're not doing that. We're just either getting stopped out or we're hitting targets. And I know that with a 58% strike rate and a reward to risk structured this way, I know that I want to just keep taking these over and over again every time they present themselves, because I don't care about moving my stop or graceful exit. I just want to replicate my tested results and the criteria in my testing. So that's it. Hopefully we can roll over and hit targets, and I'll update you in the next one. Alright guys, the final update on this video. We rolled over and hit targets eventually this morning. I was unable to actually catch this, which is bloody annoying, because I kind of did this follow-on video, but I was in my team meeting and we rolled over and hit targets this morning. So look, it was, I hope this, I was going to update this video whether I got stopped out or hit targets. The most important thing that you take home is the importance of sticking to a plan. Okay, if you're doing all the work to produce or formalize a thesis and a prediction of what market's likely to do based on your expertise, based on your technical analysis, and then you have a toolbox of strategies that allow you to make different decisions depending on what situation is playing out, so that you can get involved in the market and capitalize on these moves, and then having a way of executing that trade. The moment you execute the trade, all the hard work's done. Like, now it's just a time to leave it and let it go, and you're either going to get stopped out or you're going to hit targets. In this instance, we hit targets, but it didn't look like it was going to go in our favor here. Okay, so the most important thing is you have to be prepared to get stopped out and enter again. You have to be prepared to hit targets and enter again. The most important thing is you just consistently approach the markets doing exactly the same thing. And when your trade plan says to you that there is a trade presenting itself that you want to take because over time it provides you with a profit, then it's your job as a trader to just execute that and go with it. Right, so I hope you got value from this. Let me know in the comments if you managed to catch this yourself, if this was something you was looking at. Let me know if you took profits early, or if you moved your stop, or you had one of those kind of psychological demons where you couldn't quite stick with it. It's a great thing if you did. That's just a warning sign, an internal warning for you to say that you don't really have a true expectancy of your system, and you might need to go and test a little bit more. You might need to go and get to grips with your system so you understand it a bit more, or you're just following blind from someone else, which is never a good idea, which is the reason I launched this channel. Okay, I want to empower you so that you can be able to trade for yourself and be reliant on no one else. And when you're in that that position, you're in a position of supreme financial control. So I hope you like this video, guys. It was a continuation from the first video. Give it a little like and subscribe to the channel if you're not already. Give us comments in the comments section below. Hit the notification bell so that you don't miss any more of these. I'm going to be doing these on a weekly basis, so you really will get a good trading education just by watching these videos. Until then, take care, have a great rest of your day, and I'll see you in the next one.